All right. Good morning, everyone, and thank you for dialing in and joining us live. It's the first day of school, and in a lot of places, I know it is here. So um, we'll keep the background noise to a minimum because I'm sure most people are going to watch this on recording later on. And another thing that's um, I think interesting this time of year is we've become accustomed to really extreme volatility in this market, and the last 30 days have really bored us all to death. So you got a lot of people that are you got brokers all over the country complaining that their customer base is kind of checking out because they've just been beaten up to death. And to me, that's perfectly consistent with the chart formation that you would have on your that you have in front of you. Uh, when when you're in a sideways pattern and the market just oscillates and just beats you to death, up, down, all around, then you tend to check out and you tend to lose interest because you start thinking, oh well, nothing's going to happen. And I think that nothing could be further from the truth when it comes to trading. When we see these big triangles come to a inflection point like what we've got here, I think your professional traders really have to laser in because you know that the next move is going to be dramatic and it's going to be real and long lasting. So the question is how do you position it and what do you want to do? So you can see corn, right? We've just coiled. We've been in a huge range, basically $1. We've been whittling that down here to a few cents, and then we got this big report on Thursday, and the USDA shocked the market by collapsing the yield by 5 bushel an acre, and then and we're gonna go through that balance sheet here in just a minute in detail, but basically the report was bullish, right? And we really should have just been up and out of here. But you can see we just didn't hold it. And so for the last 3 days, people have been on pins and needles waiting to see what's going to happen because we should have had follow through to it, and we just haven't gotten it. So now, over the last 24 hours, you've had people actually flip and they've turned bearish and they've said, well, if you can't explode out of a triangle with as bullish of a report as what we got the other day, then it's not going to. It must go lower because we're failing to respond to bullish catalysts. And okay, I certainly have said that in reverse, right? When you're failing to respond to bearish catalysts, I've said lots of times, hey, that's really bullish. And so I'm not being negative on that argument at all because we haven't gone higher. But I think the reason that we haven't gone higher is because of the nature of rationing. If we break up out of here, and today it's if we break this 595 level, right? If we break the report day high, then that sets up a pretty significant challenge of these contract highs, okay? And if we break those, then that puts us into what I think would be a parabolic state where you see the market just really accelerate higher and basically lose all control, right? And throw caution to the wind. And I think the reason that we are so hesitant to do that is because at that point we're into rationing. And rationing is a truly violent event because it's literally assassinating an industry, right? You're killing demand. You have to go after somebody. And so I don't think the market wants to do that unless it must do that. I think that's the best way to describe where we're at. If look at Minneapolis wheat, and I don't have that chart pulled up, but if you do take a minute, look on the internet and find that chart, because what you'll see is that it didn't go parabolic and didn't really accelerate higher until after harvest started, and after it was confirmed that the yield was in fact terrible. leading up to harvest from January, February, March, April, Minneapolis wheat really was sideways and choppy and consolidated, much like this did. And it just didn't do anything at all. And it frustrated people and made people doubt what was happening. And now it started to work higher. And the reason is because it knows it's short and it's got a ration. So, and I'm not saying that corn is short or that or that we are going to ration or that we might, but I'm saying that's what might come next. And I've thought that all summer long that we should be, because we're so apocalyptically bullish. Now, if something's going to break us out of here, I think there's got to be some fact. I think there's got to be something meaningful that's going to do it. And if you look at what the corn market has withstood, right? We've talked about the fact that we didn't rally out the top side on bullish news, but let's talk about what hasn't happened on the bearish side either. There's a bill on the Senate floor called the Ethanol Elimination Act, right? That's 40% of your corn supply. That actually exists. That's happened. We haven't been exporting the way at the pace that the USDA says we should be exporting. We've got near perfect pollination weather across most of the Corn Belt. We've been fighting the Delta variant, right, and shutdowns, and we've been fighting all of those things. We've been fighting acreage number. The FSA says, hey, we may have more acreage coming. So we've been fighting increased supply, decreased demand. We've been fighting all of these headlines, yet we haven't broken down either. So we're not responding to bullish news and we're not responding to bearish news. And so I think what we've got to do is take a minute, and I'm going to show you a couple things here, and we're going to jump into the USDA chart. First of all, I want to talk about seasonals. All right, this is a seasonal pattern of a seasonal chart of the December corn contract. And this is going back 30 years, 15 years, and 5 years, okay? And the reality is that from June through October, your seasonal corn chart is down. You should have extreme downward pressure. What causes that? Well, it's pollination, right? We pollinate a corn crop. Farmers get comfortable with their yield. They start to sell it. And the market's not stupid. It knows that. And so it's going to help you sell it by speculators selling it too, and they're going to push it down lower. So look at this chart compared to our chart, right? You've got a completely sideways trade that should have been an absolute bearish downtrend in a world where you have the Ethanol Elimination Act sitting on the floor of Congress. That should have been a real negative catalyst, and we didn't get it. Why? Why wouldn't we have gotten it? Well, let's look at our balance sheet. Now, I'm a trader, and I'm a trend following trader, right? I don't try to scalp, highs and lows in a day or anything like that. We want to follow a trend, and we want to stay on it. So I'm looking at this trend that goes all the way back to last year, and I can make this worse too if I go back further, where the USDA said we had a 3.5 billion bushel carryout. And look at the trend on our ending stocks. It's just getting tighter and tighter and tighter. We've had 2 periods where they've increased the yield by a little bit and come back. So if you charted this would look like a downtrend, right? And what's going to change? What's out there that's going to change that? I think you've got to really question this number right here, because if you left this number where it was, okay, 14,840, which was the use number that they had posted in July, they decreased it by almost 200 million bushels, right? If you look at that number and you put it back in, and maybe even a little bit more, they would have posted a carryout under 1 billion bushels and under 7%. That would have, I think, incited rationing on a yield of 174.6. I don't think the market would have taken kindly to that at all. So I think they just massaged the numbers. Now, what's fascinating about that, okay, is that they didn't decrease global supply. And what they did is finally start to recognize that this number right here is coming down. So this is what Brazil did in 19 and 20. They grew 102 million metric tons. And for this year, they finally decreased that to 87. Now, the difference from 102 to 87 is 15. That's 560 million bushels of corn, okay? Um, uh, so that's a half a billion bushels smaller crop that the USDA said that they had. And from the prior report, that's a six or seven, I can't remember which, a million ton or 250 million bushel decrease. So the USDA decreases the Brazilian crop by a total of 600 million bushels. They don't decrease world demand, but they decrease ours? I don't get it. Like, nothing about that makes any sense whatsoever to me. When you, especially in context of fertilizer prices and what other countries are doing. So I think the USDA is going to either, I think the USDA is going to come back up on this number. Remember, they missed demand by 1 billion bushels last year. And I think part of the reason is they just want to see what's going to happen because they know what happens if they print a number like this. So where are we really? You got the Pro Farmer Tour going on. You got a lot of bearish yield talk. Well, the Pro Farmer Tour is confirming what the market, what the USDA is saying. If you dig through those numbers, the Pro Farmer Tour is coming out pretty much on par. You know, +1, -1, whatever, in different states. But we have a great crop, right? We have a really good crop in the areas in which they're touring. But where they are not touring are all the problem areas, where all the drought is. And so I think one of the catalysts that really could drive this market is in the FSA numbers. If you dig down deep into them, there was 1.5 million acres of implied increased planting in corn. Okay, so if I plug that in here and you leave yield at 174 and you kill demand another 300 million bushels, boom, you're at a 1.7. And I think that's what a lot of people think is going to happen. But if you don't do that, you're still at 1.2 billion. But what if you abandon acres in North Dakota and South Dakota? And I don't think that's a far cry because they just abandoned a huge portion of their spring wheat crop. You know, their good to excellent rating is 20% versus 75% in prior record yields. So your issues in that crop are significant. And what if they push that yield lower just a little bit? So you can either take acres back out or you can take yield out in order to deal with that. So you're dealing with a carryout range, I think, of somewhere between 1.2 billion and 800 million, which would put us in a position of having to ration. That also puts us in a position where we have to grow a big crop. So I think we're just sitting here trading sideways until we decide what to do. Now, if that makes anybody nervous, and I get it if it does, because I can't tell you which direction we're going to move out of here, but I think we're going to move out of here fast, and I think it's going to be violent. So it's a good time to be hedged, right? As a speculator, I want to trade the long side of it because I think the evidence suggests that we should go higher. I think that the weather's bullish. I think the demand factors are bullish. I think the supply factors are bullish. I think the USDA report is bullish, and I think the trend is a contracting global balance sheet. So I think all of those things lead to a risk reward of, hey, let's put some money and bet that we're going to break out the top side. Now, flip my, turn that switch off and say, hey, I'm a farmer and I don't want to give back 550 corn. I want to make sure that I protect it. So, okay, let's do that. I think this is where this is a time where you really want to own a call and sell your futures. So lock in cash, sell, buy a call on top of it. I absolutely would not go into this without moving forward or without upside mobility. Now, in a perfect world, what I would tell you to do is um, be prepared to move to March or May on those calls, because I really think that that's where the tightness could come. You can choose to put a stop below this day's low right here if we challenge it, and own a call back above the high. That would be a decent spread. Or you can just sell futures here and move up. And I would recommend getting, at least 50%, if not 70, 75% sold here, just to hedge yourself. And I think that that's probably a move that we're going to make. We had sold down in here and bought 530 calls. I think we're going to move those calls up to 570 or 580, and bank some of that profit and average up, and then sell some more, and that would put our average sale price right in here. That's not accounting for any other long profit that we had made back in this move here. But I think averaging up into that is a prudent move, removing that downside, but keep that upside wide open, because if it does explode, I don't know that you're going to have time to get in quickly. So I typically don't like to buy a call and sell on the same day, but I think this warrants a different discussion based on what could come. Okay, soybeans, same thing as corn. I mean, you look at the soybean balance sheet, guys, and it's awful. I mean, it is just so it is just so bullish. You can't even stand it. You drop that yield to 49 and you have no soybeans left. So the market is betting that Brazil and South America are going to plant and grow about 300 million bushels more than they grew last year, which can definitely happen, but it's not in the ground yet. It's not grown, and so it's probably a little too early to discount it. But that's the bearishness coming from soybeans. You've also had slow crush pace, but the more I read about that, that's because they can't get them, not because they wouldn't grind them because of low profit. It's because they just can't find them. So I think beans are really bullish. I still think we're going to take out the old highs, because I think that these numbers over here are more likely than not, just based on what I'm reading. And if China decides that that's a risk for them, then they're going to come in and buy this market like crazy as well. So for soybeans, I would probably give them all the way down to $13 before I really got too nervous about hedging them. If that's too much risk for people, then I'm not going to argue with moving to 30% sold or something. But I would leave the rest of it open, because I think they could really explode, $4 or $5 higher out of this range as well. Okay, wheat. Last but not least, what's our good friend wheat doing? Wheat's been on an absolute tear. It took a breather yesterday. I think it's got to put some pressure on people. This morning so far, we've got a reversal working in wheat. We're looking higher in wheat. I think we're going to come challenge $8 soon in wheat. So I'd be very, very patient with it. It wouldn't be surprised to see it work higher. If you're done with it and you just want to move on and close out last year's, or 2021's crop, that's great. Sell it. I would look to re-own it with some calls, or be even more patient with my 22 wheat, because I don't think that the fundamentals are there to push it lower. If corn explodes, wheat's going with it. Remember that. I don't think that there's a huge bearish case in wheat, because the world balance sheet is just continuously contracting. So we'll see what happens with it. If something develops and we change our mind, we will let everybody know. All right, that is what I've got for you this week. I think we got to hedge corn, because we can't guess what direction that thing's going to explode up out. Even though I think the evidence says bet bullishly, I think hedging is an appropriate move today. So if you have questions or want some help getting any of that done, please call. We are always happy to help. And remember, there is significant risk in trading futures and options. And so before you do so, you should only do it in light of your own financial condition. Hope you guys have a great week. We will talk to you next Wednesday.